We're here today with Mayor Bob Stone, Mayor Beavercreek, talk about earned income tax proposal that's going to be on the ballot in November. And what we want to talk about is how a city income tax would work on the folks here. So can you talk about the types of income that's going to be taxed at 1%?
Sure. First, thanks for having me, and we're looking forward to the election coming up. The earned income tax has been established and set up in a procedure that will make it just very simple. If you have earned income from a job, from an employer, that income would be taxed. If you have rental property, for instance, that income would be taxed. The personal revenue that you have from Social Security, from retirement systems, from interest, from capital gains, that type of revenue is not going to be taxed under this proposal. And so it's a very simple, very straightforward, and hopefully everybody will be able to understand it.
Okay, when we talk about that, you've got people that live here, you've got people that work here and live here, and you've got people that work here and live outside.
Absolutely.
So from a tax perspective, can you talk about those who are going to live and work here in Beavercreek?
All right, for those that live and work here right now, they are not paying an income tax at all. And so those people will be responsible then to pay on earned income a 1% tax. But they will also then receive, because they live here, they will receive the property tax reduction. And initially it is a 3.4 mil levy that will expire. And that levy alone generates nearly $5 million. And so they're right off the bat, now it's only a little bit per person obviously, but right off the bat there's $5 million that's not going to be collected on property tax. Down in the future, if we were to stay on the path that we are on now, we would, in order to keep up with inflation, keep up with citizen demands, we would have to request quite a few additional property tax levies. And so the number and the exact number that we'll save in the long run for a property owner is difficult to know, but it could, I think eventually, it will average out that the person that lives here and works here will probably have a wash. Now, it won't happen the first or 2 years or 3 years, but down the road, it will be about a break even.
Okay. And what about those who live here and work elsewhere? For instance, if I lived here and I worked in Kettering, what's the impact?
All right, well, people that live in Beavercreek and have the pleasure to work in Kettering or Dayton or Fairborn, any of the cities that have an income tax currently, those locations have an income tax greater than 1%. And so we are guaranteeing a credit so that you would not pay anything additional to the city of Beavercreek, but the city would receive that first 1%. So right now, that first 1% of that $50,000 a year income is going to that city you work in, as well as the other 1 or 2% that city may have. No, we would not receive any money from those people. I'm sorry. Those people that live here and work in another city, you pay where you work first, so we would not receive any money from those people, and they would not have any additional tax. So the people that live here and work elsewhere where there is an income tax, they would benefit drastically from the property reduction, the income tax or the property tax reduction, but they would not pay an additional income tax to Beavercreek.
Okay, so if I lived here and worked in Kettering, what you're saying is I won't see an increase in my city income taxes, but I will see a decrease in my property taxes. And those taxes that are taken out, 1% of that will come back to Beavercreek behind the scenes.
No.
No.
No, that's not the case.
Oh.
It goes the other way around. Where you work gets taxed first. If the person that lives here and works in a taxing city, they will have no increase in earnings tax, and they will have a reduction in their property tax.
Okay.
And the city does not receive any of that back.
None of that back. So that 2%, if I'm working in Kettering and they have say a 2.5% income tax, that 2.5% continues to go to Kettering.
Absolutely.
Oh, wow. Okay. What about those who work here and live elsewhere?
That's where we get to share. And right now, the people that work here and live elsewhere, if they live in a taxing community like Dayton, Fairborn, Kettering, they are currently paying income tax where they work. Where they live, because they're not taxed where they work. Now, since they work in Beavercreek, if we were to pass this earnings tax, then the city of Beavercreek would receive that first 1%. The other community that they live in would receive anything above the 1%. But the person that works here, we would get the first 1%. And that is really what the community has been out there trying to find a way to allow those people to pay their fair share for the infrastructure, for the services rendered elsewhere. And so that's the big piece of the pie. And the estimate right now is that piece of the pie is about 75% of the workers in Beavercreek live in other communities. So if we can generate that revenue, everybody that lives in Beavercreek will benefit drastically from that.
Okay, so what I'm hearing is that those that work here and live elsewhere will start sharing the burden through the earned income tax, a burden that they're not sharing right now, that is all on the property owners here in the city of Beavercreek.
No, there's the ones that live elsewhere and work here. That's the one we're on now, right?
Yes.
Okay. The ones that work here and live elsewhere, they will start carrying their fair load and pay their fair share to the services that are required for everybody here in our city.
Are there any estimates on how much that earned income tax would give the city each year?
The estimate from just the people that work here and do not live here, the estimate right now is based on various sources is between $12 and $14 million a year. Now there will be obviously a little more income than that from other sources, but that's what we're losing every single year. And just an example, we go back to the previous discussion, and that is that the 3.4 mil levy generates about a little over $4.5 million a year. So that that revenue is replacing a sizable levy.
Wow. Okay. Well, Mayor Stone, is there anything else you'd like to say to the folks as far as the earned income tax that's on the ballot?
I just urge everybody to do their homework a little, and the In Touch, if you haven't received it yet, you should be receiving it any day. It has just about every answer to just about every question you can ask. We are now 40 years old. This is our 40th anniversary as a city, and we are no longer a township, which our current revenues are generated the same as a township would be generated. The wisdom of this state decided that they would allow municipalities a certain way to generate revenue, townships a certain way, counties a certain way, school districts a certain way. Well, one of those tools that the state allocated to municipalities was income tax. And we are not taking advantage of that revenue source, and especially the revenue source of the people that work here and do not live here. So I urge everybody to really give it serious consideration. I know there will be people that are going to end up paying a little more. I mean, that's always going to be the case. Those people that, like myself, that lived here most of my life and worked here most of my life, we're gonna pay more in the short run, but I think we're going to benefit more and maybe not pay any more in the long run. So it's time for Beavercreek to grow up and be the adult that we've become.
Well, thank you very much, Mayor. I appreciate your time today.
Well, thank you.